No, I said all that was really helpful, and
Okay.
I just realized I didn't record any of it, so I feel pretty stupid. But
Well, you know, if
fine.
we boil it down to, it's basically quality setups, um, think big picture. What was the other thing? Quality setups and uh,
Long term.
think long term. Yeah, only trade quality setups. Think long term. Keep that journal. Write it in every single day, and basically, you know what this issue is, and just always have it on your mind. Um, and I think if you do that, it'll stop you because this stuff isn't really that hard. If you understand what's going on in the market, you know what to look for. You've mentioned it. You understand everything we're talking about, right? It's just putting it into practice. Uh, okay, we just make sure I have this right. We've gone over earnings breakouts and breakdowns, and I'm still tracking earnings, but you've obviously seen that I'm not trading a lot of it. There
Right.
have been some good ones, like you mentioned Etsy. Etsy is a good earnings breakout. And it was actually a good short too. I think you caught that runner short.
Yeah.
Twilio is another one that has been good.
Yeah.
Send, but really, it's more market related right now. So you're keeping the earnings breakout and breakdown lists, right?
Yeah.
Okay, good. And if you want later, you can send those to me, and I'll go through just to make sure compare them to mine. We went over market analysis, right?
Yes. Last time.
Okay. And then we have not gone over sell-off strategy yet, have we?
No.
Okay, let's talk about that then. And I've got to get out of here by about 7:35. So let's see if I can get through this. Um, okay, and when I go over this, you're going to see a lot of what I talk about in the report. I've been basically putting in this document into practice. Um, CBK598, right? At Gmail. That's you, right? Hello? Hello? All right, I think I can hear you again.
Did you lose me again? Hello?
Yeah, I can hear you now.
What the hell?
I don't know, but that's you, CBK598, right?
Yes. Yes. Sorry.
Okay, all right, so you have the document now. All right, let's go through this. So this market sell-off strategy lesson here, document, I would say out of everything we go over, it's the most important lesson or strategy.
Okay.
And the interesting thing about it is it's not something that's at the forefront all the time. You're probably only going to use it 1 to 3 times a year. We're in that period, right? So if we look at the market over the last, 2, 3 years, basically used it, in 2018, we've used it a lot. But, if we go back here, 2016, you used it here and here and here. So in 2016, you would have used it 3 times. In 2017, it was twice, and they weren't even that big. In 2018, it's been a lot. It's basically been here, 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 and right now. So 4 times. So it's something you're not using all the time, but it's really important because what happens with especially amateur traders, and I think you've experienced some of this now, very easy to trade during these periods, right? These periods here. But what
Yes.
happens is, like, if we go to 2017, what would happen is, a trader will trade very good during this period here. And when the market pulls back, they lose more than they should be losing. So, logically, if you started trading right here in 2017, when the market was at 221, it goes up to 239 and it just pulls back to 231, you should still be up substantially during this period. And if you're trading really the way you should be, you're even making money on the downside. So instead of being plus 10 and you were plus 20, you could be plus 25 or 30. But what happens to a lot of people is they get crushed during these periods, and they give up more than they should be. Instead of only being plus 10, they might be plus 5 now, or they may even lose all of it, or they blow up their accounts. And I think you've experienced some of that in this period here, So that's very common. But if you go into this market sell-off strategy, that will not happen to you. And you might even make money. So basically everything I've been doing during this period here comes off this market sell-off strategy. So number one, I get a lot of eye rolls over this, but I think you'll agree with this. Number one is stay calm. Trading is a decision-making game. Everything you do is based on decisions, right? Not only the trades you take, strategies you use, the setups you're trading, the charting platform you use, the amount of monitors, the desk you're sitting on, whatever it is, it's all decisions. It's not like a 9-to-5 job where you can kind of phone it in. Every decision you make makes or loses you money. So you have to stay calm. Especially the more volatile the market gets, the more calm you need to be, because you really need to be focused. Number two, and you've probably seen it, we already talked about this a little bit, the usual setups and trading style you've been using do not work. And you have to be aware of that. You have to be able to adapt to the new market conditions. So what has worked for the last 2-3 years does not work during this period, does not work during this period, does not work during this period. Basically, over the last 2-3 years, most of the time, if you're trading breakouts, if you're trading continuation patterns, if you're trading pullbacks, you're making money, right? You don't even have to think too much. Just trade those setups, and for the most part, they've been working. Those are not working during this period, right? If you've been trying to trade pullbacks and breakouts during this period, you are getting, for the most part, crushed.
Yeah.
Because every one of these keeps failing. So you have to understand we're in a different market, and that's not the style you should be using. It can be hard to do because you put a lot of work into it. You create this 100, 200 stock watch list. You put a lot of time and preparation into it. It's hard to just say, okay, I'm ditching this strategy. But you have to be able to do that.
Well, can you hear me?
Yeah, I can.
Okay, yeah.
So that's number two.
Yeah, I found out the hard way that I shouldn't be trading with the same strategy.
Right. Number three, do not overtrade. Make less trades, not more. Do not micromanage with every tick. So there's this tendency to feel like, wow, the market's really volatile, I'm going to miss a move. Or, I see this little bouncer, I've got to jump in here before I miss it. You're afraid you're going to miss this move. You can't think like that. You have to be very patient. And that doesn't mean you trade scared, as you've seen, with the trades in the trade report. We don't trade scared, we're just trading less. But when we see an opportunity, we jump on it, right? So you can't be hesitant when the opportunity is there. You do have to jump on it, but you do have to trade less frequently. If you trade a lot, it's almost guaranteed you're going to lose during these periods. And that's why a lot of people get crushed during these periods, is they're just trading way too much during these periods. Number four is time frames. Understand the difference between day and swing time frames. I think most of us swing traders know this, that we should be paying attention to the dailies, and what's happening intraday is not very important. And usually when the market is going like this, people adhere to this rule. But when the market starts getting crazy like this and we start getting these big intraday moves, there's this tendency to want to watch all day and look at everything that's happening in the market that day and try to start trading off that. Like on this day here, this was this big, ugly red day. There were 3 or 4 spots during this day where it looked like the market was going to reverse intraday, and then it failed. It looked like it was going to reverse. And if you went on Twitter, there were all these people calling for, this is the spot where the market reverses and everyone's jumping in. No, you have to wait to see what happens that day. And you hear me talking about it, watch this intraday move and see what happens by the end of the day, right? And we might get our signal at the end of the day, but intraday, unless it's something really strong, breaking a level, we're basically ignoring it. For swing traders, it's the open and the close that's really important to us. Okay, number 5, cash is a position. So I know it's tough to do. You don't want to be sitting there in cash, but cash is a position during these periods. If you stopped trading right here when the market was at 291 You basically locked in everything you made, and you are crushing the market. Let's forget about making money during this period. If you just stopped right here, the market is down, 10, almost 10% during this period. So you're crushing the market just by doing nothing and being in cash, right? So it's okay to say, hey, I don't have good opportunities here. I'm going to be all in cash. And when the market gives me an opportunity, then I'm going to start trading. Or you can say, you can also treat it as one kind of divided position in your account. Like, if you have a $10,000 account, you could say, okay, 6,000 is going to be in cash and I'll trade 4,000 of it. So that protects you some as well. So you can always be in cash until you find a good opportunity. Number 6, don't guess. Trade only when you have an edge, no gambling. So it goes back to high quality setups. We identify things in this market. What did I say today in the market, in the report? I said, we're going to wait and see today. If the market goes up and crosses the 9 and reverses that poor open today, we could go ahead and add one long position. If the market starts failing here, I'll have my signal to take on a short position. But that's it. I have kind of the parameters laid out for what I'm going to do. And if that doesn't happen, I'm going to sit on my hands and do nothing. So if we close where we are here today, I'm not going to take a trade. So we have the plan. If it doesn't happen, I'm not going to do it. If I were to take a trade here, I'd basically just be gambling on what happens in the market, and I'm not going to do that.
Paul, I have a question about the edge.
Right.
Trade only if you have an edge. What does that mean? Does that mean like when you're talking about your strategy, okay, now this stock is up over the 9 for 2 days, you could go long or you can go short.
That gives, so whatever you've identified as an edge. So the things I talk about in the report when I lay out what I'm going to do, that's what I think gives me an edge. So you've analyzed the market, right? So we've analyzed the market right now.
Yeah.
We know that we're in this state where we really don't have an edge. I feel like I'm guessing, but we know there's a potential higher low here. And if we cross the 9, then I feel like I have an edge. I don't feel comfortable trading below the 9. Now, if this level starts failing, we have another kind of one of these dead cat bounces like we had here, right? So I would feel like I have an edge in that regard as well. So the things that I do, the things that I trade, those would give me an edge.
Okay.
I mean, there's a lot of different edges. You could have an edge with a specific setup, with a sector. We've talked about the home builder sector. We feel like we have an edge there because we've analyzed it, and we see that home builders are coming back. So wherever you see an edge. Okay. So if we stop this lesson right here, and there was no big strategy in what we just talked about, it was really just protecting yourself, right?
Yeah.
If we stopped right here and just did these 6 things, you'd probably be better off during this period of October and November, right? Maybe it'd be not as, great as you'd like it to be, but you really would have protected yourself from getting crushed during this period. So just putting this 6 into practice, you're basically beating the market, beating most traders just by doing this. Now let's talk about actually making money during this period.
So I have a question.
Yeah.
How do you define, or how do you know that you're in a market sell-off?
So when we do our market analysis, we have our market breadth. We're doing all that market breadth stuff, right?
Yeah.
So up here, we were concerned. We don't know at that point we're in a market sell-off. What I always say is, and I should have cleared that up here when we started this, market sell-off strategy doesn't mean we're in a sell-off. It means we're in indications that there could be a sell-off. Okay, so I get very protective. So there are points where you'll go into this strategy and the market doesn't sell off. And then it gets back on trend, and then you just switch, you get out of market sell-off strategy. I mean, at this point, we know we've been in market sell-off, right? Yeah. But we really didn't know we were in market sell-off until, we crossed below, I would say, the 50-day moving average. Then we really started to know, okay, all the stuff we've been thinking is happening and we're in market sell-off mode. But really, yeah, that was a good question. It's not just market sell-off, it's indications that there could be a sell-off. And sometimes you'll be wrong. That's fine. You protected yourself, and now you adapt and go back on, what you were doing before. Okay, so this all protected yourself. Now let's talk about, you have these indications there's market sell-off, but in the initial stage, you're 100% right. We don't know, right?
Yeah.
Now, after that initial move, usually this initial move, you're not doing a whole lot. You're just protecting yourself. And this played out when I was trading, right? We protected ourselves up here. I made very few trades during this period, right? But then when the second move came, that's when I got aggressive. I basically got aggressive right in here, right? There wasn't much I could do here. Right in here, I got aggressive. And we got aggressive to the downside. But I didn't know at this point I was going to be shorting. I could have gone long, depending on what the market told me. And we were talking about this in the report. So what we're going to do is we're going to prepare. During this period here, we're basically preparing. So what we're going to do is we're going to build, and you heard me talking about this, relative strength and relative weakness lists. Okay? So you're building a relative strength list. And usually you're going to go to your relative strength list. This is one of the markets in the last 3 years where we didn't do that. We went to our relative weakness list. But normally your relative, going back the last 3 years, it's your relative strength list that has worked. So you're basically building a list of stocks that are handling the sell-off well. And interestingly, those ones that we built actually have still handled it well. For example, if you remember in the report, when the market was getting crushed here, we were talking about Alta, and Alta was showing relative strength, right?
Right.
And it actually still is. Look at how good Ultra has done during this period. We were talking about Orly, and look at Orly. Orly has still done very well during this period, right? We were talking about Twitter, and Twitter still has handled the sell-off very well. So you're going to build a relative strength list, and you're also going to build a relative weakness list. Those are stocks that have not handled the sell-off well, that are actually doing worse than what the market is doing. Back then, we talked about NVIDIA, and NVIDIA has continued to do very poorly, right?
Yeah.
Through this whole period, it's done much worse than the market has. We talked during this period about Facebook, and Facebook has done worse than the market has. So it's played out exactly like we kind of laid out during that period. So you're going to build these relative strength and relative weakness lists. Now, for the relative strength, there's a couple of ways you can do this. One, you look in your focus list and you just look at the stocks in your focus list that are holding up well. If the market is down 2% one day, down 1% another, if the stocks you have that are maybe break even or only down 0.5% or even green, those are the stocks you're going to put on your relative strength. Also look at where those stocks are in relation to their moving averages. Like, we see SPY, SPY crossed below its 9, crossed below its 50, and it's still below its 200-day moving average. Alta is above all those levels except for the 9, right? Obviously, that's relative strength.
Yeah.
The other thing you can do is take time periods. You can filter out, go pick a spot on SPY. Like, go back to from here to here. So say the last 2 weeks or 3 weeks. And then, take IWM and take the index, all the stocks that make up the index, and then go over the stocks that have performed best the last 2 weeks. Those obviously are going to be showing relative strength, right? We could do that. Let me just really quickly add that in. Let's just do here, last 2 weeks. Okay, these are the best performing stocks over the last 2 weeks in IWM. NY, look at that. APTI, Kodak. So this is another way you can build that relative strength list. So build a relative strength, build a relative weakness list, and then at that point, while you're building it, you don't know which list you're going to go to. but you're going to wait for the market to give you an indication. So basically, we had this big drop here, right? Actually, the first time I tried it was here. Remember when we had this hammer here?
Yeah.
I took that shot with Alta, and Alta didn't work out. Big deal. You know, one small loss.
Yeah.
But then here, when the market started bouncing here, what was I doing? I was watching that 9 very closely, right? I didn't do anything during this period. And I think too many people were caught up in, oh, okay, the market's going to bounce here. What I wanted to see was, is the market going to cross the 9? If it had closed up here, what was I going to do? I was going to go to my relative strength list and take a long, okay? I would have got into Ulta, I would have got into Orly, and whatever else I had on the list.
Oh.
Okay. But that didn't happen, right? We failed right here, and that's when I put on those index shorts. So for me, my relative weaknesses was NVIDIA, Facebook, the NASDAQ itself, QQQ, and I was looking at IWM at the time as well. But I took, I think I took SQQQ, right?
Can you hear me?
Yeah.
Okay.
Yeah, I took SQQ, SPX, those were the big ones. So I took SQQQ right here and SPXS, the index shorts. You can do that as well.
Right.
Obviously, those trades worked out well. So we went to the relative weakness list. So if you get your indication the market's continuing to fail, go to your relative weakness list. Now, I know a lot of people will question this. Well, if a stock has been beaten down here, shouldn't I use one that has not gotten beaten down, because how much farther can it fall? But as we saw with NVIDIA, the stocks that did the worst during the initial move will again do the worst in the next move, right? You saw that with NVIDIA.
Yeah.
If you hesitated on NVIDIA because you thought, oh, it's already beaten down so much, how much farther can it fall? Because it's already gone from 288 down to 230. Well, we saw it's the one that's going to continue to fall the most, right? There's nothing stopping it now from going from 240 to 150. So when you're ready to short, either use the index ETFs or your relative weakness stocks. So think of it as an if-then statement. If the market does this, I'm going to go to my relative strength. If the market does that, I'm going to go to my relative weakness. Now, back in 2016, do you remember the Brexit vote back in 2016?
Yeah.
That was right here. Doesn't look like a huge deal now, right? It was just this pullback here and the market went right back. But this was actually really scary when it happened. During this period, we were building our relative strength and relative weakness lists. And surprisingly, during this big move up here, biotech and semiconductors had been lagging while the rest of the market had been running. But they held up really well when the market pulled back here. Then when the market recovered, they led the market, and we traded those really aggressively, biotech and semiconductors. Again, a good example of relative strength stocks leading the market once the market comes out of it. So pay attention to those relative strength and relative weakness areas.
So,
and then when you get that secondary move, what?
Just going back to that, go back to Brexit.
Right here.
So at what point do you think, I mean, that was a sudden move that happened overnight. At what point did you have your relative weakness list and relative strength list set up?
So this was, yeah, this move was about 3 or 4 days. You know, you had the initial move, it kept going down. It went down, I think, for 3 days. During that period, every day I was looking at the stocks and sectors that were holding up well.
Okay.
So it was much shorter than this. It was just 3 days. But there were specific areas that held up really well in those 3 days.
All right. So at that point, you're watching.
Yeah. Then when we crossed the 9, I added, I think it was biotech. I added, then when it was crossed the 50, I added semiconductors. Then when it crossed another level, I think it was the high, I got into NVIDIA, and NVIDIA was actually a huge leader during this period.
Right. Okay.
So same thing now. You're building your relative strength, relative weakness list. If we start to bounce back, you know, that thing we're talking about now, if we cross a 9, you know, maybe we continue up here, I would be going to my relative strength list.
So I would want to, so I've been looking at some relative strength stocks, right? So one of them is Workday. Can you pull that up?
That's actually, I think I put that in the focus list today. Yeah, I like that one a lot too. Not only Workday itself, but the entire software application space has a lot of good stocks.
You hear me?
Yeah.
Yeah, this is not it.
Which one is it?
WDAY.
This is also software application. So they're both software application. Yeah, really good stock. Now, if you could add it here and just take a small shot as long as your risk is okay, but unless the market recovers, I wouldn't add too many positions right now.
So in order to add to this, you want the market to close above.
I want the market to confirm. Yeah.
Okay. All right. So then I have a few stocks like this that are.
Yeah, you should. Good, great. You should have that list, and then you should also have a relative weakness list. Obviously, Nvidia, Facebook, the inverse ETF. So you should have SQQQ, TZA. Okay, so we built the relative strength and weakness list. Number 7, narrow the focus list. So what you've probably noticed already is the market, most stocks are basically moving in unison with the market, right? Market has a big down day, most stocks are going to be red. Up day, most are going to be green. We're seeing a little divergence from that now as things start to shake out, but especially during the beginning, during this period here, this period here, and this period here, hardly anything is going to go opposite of the market too much. So we narrow our watch list. We want to make good decisions. The more stuff you're watching, the more, especially during these volatile periods, the worse your decisions are going to be. So you're getting no edge by watching a lot of things. Everything's moving with the market. So key in on the important ETFs and the major stocks, the Facebooks, the Amazons, the Apples, Goldman Sachs, whatever else you want to watch. And you can throw in a few stocks that you find interesting, but I wouldn't let that list grow to more than 20 or 25 things. You want to really be focused in on the main important things you should be looking at. It's not a normal market where you have a lot of different things going on. It's just you're really focused on these specific things happening in the market. Okay?
Yeah, sorry.
All right. Now, what you've noticed is we really focus in on the key levels in the market. All that stuff we talked about in market analysis, the major open gaps, the major lows, the pivot points, the moving averages, these are all very important levels during these really big market sell-offs. So basically, your market analysis should really be in play, and you've noticed that here. Most of the trades we're taking relate to the market analysis we have during this period, right?
Yeah.
So pay very close attention to that. All right. So now we've talked about protecting yourself, and just by protecting yourself, you're going to beat the market and beat most traders. We talked about getting ready for that next move with relative strength, relative weakness. And then we've talked about more preparation in terms of knowing where we are in the market. I got to run here now. So we'll continue this next time. But you have the documents, so take a look at it. Next, we're going to talk about protecting yourself when you do get caught. Like if our market breadth hadn't been right here and we were in like 5 positions, what do you do?
Right.
Then we'll also talk about actual trades you can make during this period that are low risk, but you can make money on. And that's basically going to be trading VIX, pair trading, and trading safety things like gold and the Dow stocks.
Right. Okay.
And we'll talk about that next time. I got to run here. When I get back, I'll send you an email with some dates and times. If you know some dates and times that are good for you, just throw me them out in the chat here.
Okay.
So I'll get back to you in about an hour.
All right.
All right, Sibby. Remember, journal. Focus on those things that you need to focus on, and then send me these messages anytime you need to.
Okay.
All right. Talk to you soon.
All right. Thank you.
Yep.
Bye.
Bye-bye.